The JSE is out with annual results after the market closed this afternoon. The company reported solid revenue performance and cash flows and tight operating cost control for the year. Headline earnings per share were 29% higher, just over 562 cents per share. Joining us now from the JSE is Chief Executive Nicky Newton-King. Nicky, thanks very much for joining us on the show. Just picking up on the technology headache you've been having in terms of systems, can you give me clarity on where you are and whether all the bugs have effectively worked their way through your tech systems?
Well, Bronwyn, thank you very much for having me. But on technology, as you know, we're a very technology-dependent company. We use technology to trade. We use technology in the back office. And from a trading perspective, we are busy bringing our trading technology back from London for the equities market. That's going fabulously, and we'll be implementing that in July. On the other hand, in our back office technology, we've been working for nearly 8 years now on replacing what is a very well-functioning but 25-year-old technology with a next generation version of that technology, and that hasn't been going so well, and we were not able to implement it as we planned to at the end of last year. So we've taken a step back. We've looked at that technology, and we're busy re-examining where we will go with that. But in the meantime, we've taken an impairment of 223 million rand, which, as you see, has impacted our basic earnings. So the headline earnings are 29% up, but our basic earnings are 10% down.
Nicky, just talking about growth prospects for the JSE and looking at the partnerships that you refer to, I see here you're talking about joining forces with 6 other emerging market bourses. That's to cross-list equity index derivatives by June 2012. Can you take us through that exciting project?
The BRICS exchanges have formed an alliance which will essentially allow the 6 BRICS exchanges to cross-list and trade in their own local currencies, the benchmark indices of the other BRICS exchanges. This is the first time in the world that something like that has been done. I think it's extremely timeous. Certainly our take on where the global market shifts are going is that BRICS is going to become far more important, and this is the beginning of us establishing much deeper relationships between the BRICS exchanges, but also bringing to our clients products that allow them to access those markets and those markets to access us.
Nicky, Wayne, when you look at the JSE, I mean, obviously in the very, when we had a lot of exchange control, companies were listed here, they had to be listed here, there was no option. But now with the internationalization of a lot of our companies, we actually sit in the case where our bigger companies, more and more shares are owned by overseas shareholders, and they don't necessarily trade on the JSE. I mean, you've mentioned the BRICS type, that's very important, but what about the rest of Africa as a growth opportunity for the company?
I think it is a growth opportunity when, particularly now that we've got the inward listing rules relaxed and we're able to attract and include in our indices companies from outside the country. The reality is that South Africa is by far the largest, most liquid exchange on the continent, and that should be every reason why top African issuers should want to list in Johannesburg. But in that regard, we're competing with the likes of London and Toronto, and so our role from a competitive perspective is to focus on the liquidity and the quality of the market that we operate, and to put that to these top African issuers as a really competitive space relative to where they might otherwise look.
Nicky, good evening. One of the criticisms that you still haven't been able to shake off is that you invest significantly in IT CapEx, so your CapEx to sales ratio is pretty high relative to your peers, Toronto Stock Exchange, Australia Stock Exchange, and you constantly impair that, and as a result, you're constantly underpaying the dividend that you really could pay. So your dividend could be higher, capital returns could be higher. When are you going to be able to shake that off and sustainably come in at your peers' levels in terms of your investment ratios as well as higher dividends?
Well, certainly our peers in some of the global exchanges are, returning all their profits to shareholders,
Sure.
1 times cover, for instance. I don't think we're going to be in that position because for us it is a balance between making money for shareholders and pricing our services keenly for our local users. So technology will continue to be a very big part of what we do. and we do definitely need to get through SRP, which is the big back office technology, the one that is a challenge to us, so that we can actually go past the impairment space and to ordinary depreciation. And as you can see with our other tech projects, we're going extremely well. And we will be continually reinvesting in technology, just like all of our other exchange peers are globally.
Nicky, the number of new company listings rising to 16 on the JSE. Your pipeline for 2012, is that looking strong at the moment?
Bronwyn, we never give the pipeline numbers, but as you've already seen, we've listed 5 ETNs, 5 ETFs already this year. We have, I think, 30 other structured products from BNP Paribas listed. So, we're seeing far more activity in the exchange-traded product space, structured product space than the underlying, and I think that that's going to continue.